Good morning and welcome to Equity Story Trade Watch, Wednesday, 18th of January. And I'm here with Claude, our little sesh that we've got on Wednesdays, talking about pretty much fundamentals, ideas, you name it. We'll look at it if it makes any sense or we're interested in it. Claude, welcome. We're going to talk about a few things today. We're going to talk about some announcements this morning, and that's going to involve Ampol, ALD, Volpar, VHG, TLX, Allchem, AKE, and Redbubble, RBL. So we're going to quickly go through those announcements. But of course, you know, the most exciting bit for me and you and probably everyone else out there, we're going to have a look at our ideas of the week. And there's a couple of pretty interesting ideas coming through. Before I start off, disclaimer in front of you, of course, everything we talk about is general nature only. If we talk about a certain specific stock, we look at the fundamentals and technicals only. All right, so Claude, welcome. We had a pretty mixed, I think, overnight markets with the US, I think they're down, but a small eking of up from the NASDAQ, which is nice, but generally speaking, not much direction. Saying that, we've got some announcements this morning, so let's go through them if we can, please. And I will ask you to start off with VHT, because I know that's one that you pretty much follow. You've had it before, and absolutely. I know you wanna probably get into it. And I when I saw this morning, I thought, oh, that's going to get you interested. So tell me about it. Tell me about it.
Well, good morning, Peter, and hi, everybody. Yeah, so Volpar is a company I've literally followed since listing, just because I have a particular passion for investing and a strategy of investing in med tech companies. There are some big examples of winners on the ASX in med tech, for example, ProMedicus, which I initially invested in as part of a kind of basket approach. And also in the USA, a great example is Intuitive Surgical, 160 bagger in 10 years. So medtech can be a great place for creating value, hence why I follow this stock and have for a long time. I used to own it. I sold out sometime in, I think, last year, as you could see that cash burning companies were definitely on the nose. And yep. I think actually I sold out like my last parcel of shares, perhaps even around the current price now. So I could have just held on for the journey or sit on the sidelines, but sometimes I think it's better to sit on the sidelines because, quite frankly, if you'd asked me before these quarterly results, are they going to be cash flow positive on this quarter? I would have said no. Doesn't look like it. No way, really. And actually, what's happened is they've had a really lucky quarter. They've had a bit more receipts. They've reduced debtor days, so they've got some people who pay faster essentially. Mm-hmm. And they've had some big receipts there. And on top of that, this is the first quarter where they're benefiting from the redundancies they put through and paid for last quarter, which was quite bad. So I was expecting an improved quarter this quarter for sure, but to actually cross over into free cash flow positive, that's a bit of a flex by them. Great to see. It does show that they are on a different trajectory, but at the same time, they're not forecasting as such a strong quarter next quarter. They're actually saying receipts are going to be down quarter on quarter. Perhaps, by more than 10%, essentially was on the call, what he was sort of estimating. He didn't really know. But that definitely means that I wouldn't be surprised if it actually comes through slightly cash flow, probably cash flow negative in the next quarter, which may mute the market reaction a little bit. Mm-hmm. Having said that, I just think it's a clever move by them in terms of expectations management now, because they've also said, oh, it is going to be bad next quarter. It's going to be worse next quarter. So don't expect us to remain this. But they've also at the same time subtly proven that they can actually, if with a bit of luck, get cash flow positive. So it definitely bumps it up in my esteem. It makes me realize, it makes me think that, look, this CEO and CFO combination are probably working quite well together, and makes me feel more hardened because the CFO has been there for a long time and he was very active on the call today. So I think he's in a really strong leadership role, long-serving fella. And then the newer CEO who's come in with this cost discipline. And I think that it has increased the probability that the company will not need to raise capital. So that means that I think that probably the lows are in. I don't think we see this go under 50 cents again now that they've made, or at least not off the back of this quarter. Maybe if the next quarter is bad, then it gets down to those levels again. But so positive development there, and bumped it up to the top of my watch list for sure. But I have a feeling that, there might be a bit of a run into the next quarterly. I'm not sure how high it'll get. Who can predict these things? But definitely a change there. So that's good.
So it's almost like for you, possibly a turning point, right? Where you're getting definitely more interested in this. And I suppose with these companies anyway, we know that they can fluctuate from quarter to quarter. It's more, you just need to give it a little bit more time just to see how the next quarter goes and so on, and then we'll take it from there, I suppose, right?
Yeah, exactly. Look, I mean, I wouldn't even be opposed if you were just gonna have a little nibble now and just like, it'd be the kind of thing where I would actually consider probably taking a very small, say 0.5% of my portfolio or less, very small, like almost meaningless position now, but just to put it right at the center of my mind so I see it more and I'm like a little bit more following it more closely. And I feel like sometimes doing that can make me more likely to, act quickly and decisively if there is further confirming good news down the track.
Well, okay. Well, let me tell you, technically, it's definitely looking much better than it was, right? So for those that want to trade, I'd say probably just wait until the week. That's probably my first thing, because we're right smack in the middle of the week. It has a really good jump this week for sure. So we're up 13.5% for the week. Today's up. Let me have a look on the daily, and the daily looks good, pretty good as well. But that's up what 7.8%. But we just want to see how it ends up, because like you said, I mean, initial reaction positive. We got positive cash flows, looking good. Then you listen to the talk, when you tune in to see what they're going to go, how they're going to go for next quarter, and it's a little bit muted. So maybe that's exactly what you're saying. I'd rather just wait and see how it all settles and then go. But at least it's looking pretty good. You might be able to have a trade here and maybe even a long-term investment, in the next few weeks, few months. So definitely one.
I think the other thing, of course, we're seeing this quarter is that there is that reduction in expenses now, but at the same time, they did get a grant this quarter as well that also isn't going to be repeated. It's not sustainable. Also bolstered cash flow. So, really, you could probably say that their expenses per quarter are a bit over 10 million. They're sort of forecasting in next quarter around 10 million expenses, or receipts, or a bit less. So that means it could well come in negative next quarter. But at the same time, they're now in really the vicinity. They've catapulted themselves to the vicinity of break even from, actually losing 4 million per quarter. So it's been a big jump. Yes, a lot of it's come from cost cutting. We don't necessarily know what harm that would cause, but progress has been made. Yeah.
And look, sometimes cost cutting is actually a good thing, because, it's a lot of companies back in the bad old days, they were just spending money on just ridiculous things, way inefficient. And I think it's a good thing. So, but we'll see, of course, we'll see how that obviously works over the next quarter or so. All right, let's move on. ALD, one that's come up with an announcement, that's Ampol, just updating the market. It actually was pretty good, I got to say. I mean, it was, it wasn't flash on the charts, and you think to yourself, well, maybe the good times have passed, but they've actually updated pretty well, with the actual numbers, probably beating everyone's idea what they can actually come up with. So for me, when you look at what the oil prices are, what the margins they're getting, and they're still getting some good numbers out of there, this is good. However, the only thing that's probably stopping me going, is there a trade here? No, there isn't, because it's trending under the trend line. So while the numbers look okay and better than anticipated, I wouldn't be trading in this. So for the moment, we'll leave it. But it's not a bad story, actually. Let's move on to the next one, and I'm going to go to AKE, and a big lithium miner that we trade quite often, actually, to see how they're actually performing at the moment. Lithium, of course, we talked about it over the last few weeks, that the lithium price is going backwards. So potentially we just want to maybe, take it easy with them, not to chase them, and possibly just stay away for the moment. But AKE, look, numbers are okay. When I looked at it, as you can see today, you got it up 1.5%. But again, the chart's just not inspiring enough for me. So I'm just sort of going to leave it alone and just wait for another better time. But let's just wait for the end of the week. And most of these, let's just wait for the end of the week just to see how they actually perform, because that maybe with AKE, maybe there'll be a little bit more of a bounce towards the end of the week, and there could be a trade in, but we'll see. For the moment, no. Next one, TLX. Now, can you help me out with this one, Claude? TLX, because it's another one of those scenarios where it looks like the company's come up with a positive cash flow. So can you talk us through it, please?
Oh yeah, so look, the most recent quarter, so this one's a bit big it's a bit out of my small cap focus. So it's a $2 billion company, but look, it has significant revenues to back that up. Last 12 months, 124 million in revenue. So, it's on it's priced for growth, but it's obviously like going to be a higher margin business, a pharma company there, selling diagnostic and therapeutic radiopharmaceuticals. So in this most recent quarter, I can think the news is in that inflection point that you obviously want to look for is that they have reached operating cash flow positive. So 1.6 million positive operating cash flow. That's so obviously their receipts are improving really well as well, 72 million in receipts in the quarter. Now they did spend almost 4 million on capital investment. So still free cash flow negative to the tune of a bit over 2 million in the year, in the quarter, I beg your pardon, and obviously strongly still cash flow negative for the year. But that growth trajectory looks really good. So often if it stays on that trajectory, then maybe next quarter we get really good free cash flow and quite strong free cash flow, and obviously that's what the market's pricing there. So I think now this puts this one on my radar much more. I've got to really start getting across it and having a valuation of it. But just because it's such a big company already, it's sort of been out of my general wheelhouse. But now if this is going to become a profitable, high margin, medical company on the ASX, then I think it's definitely more people are going to start looking at it. I won't be the only one. Yeah,
I agree. I think again, an inflection point possibly we've seen today, and if they can keep going at this rate and really look after the bottom line, then I'd say there will definitely be more people interested. And you're going to have much less capital raisings, if any. I mean, I think they said they've got 100 and something million bucks in cash. So if they can maintain this, they probably don't need to go to their shareholders anytime soon, which would be nice.
I'll just check if there are analyst forecasts for when they get to profitable.
I'd say, Claude, look, I still probably think they're going to be fluctuating here or there. So maybe next quarter they're going to go negative again, and so on. But I think generally speaking, the more revenue you get, you hope that they're going to look much better. Yeah, look, it looks like in FY 2023, analysts are forecasting roughly break even, moving into profit in FY 2024, FY 2025. Now, that's
obviously,
pretty good.
That can be pretty speculative, but I think you're safe to say there that they shouldn't really need to raise more capital there for that reason, that they're just at that break even now. Look, it's inflection point time, definitely time for us to both probably get a look at it, just because obviously doesn't necessarily mean it'll be good value, but it's probably enters the investable universe if it's a high margin, profitable business. Exactly.
I mean, it could always be a fairly expensive business like a PME, right? As long as it's got a really good business behind it and profitable, then people will be buying it anyway. I mean, based on who knows, because with it's really hard for that. The estimates could be way off in terms of how profitable ultimately is. So is a wide range that it could be worth, but definitely inflection point in FY 2023 is what analysts are expecting, and also what these numbers are confirming now. So that's good. All right, I tell you what, the chart looks really good. So from at least a technical point of view, there's possibly a trade here. Look at this. I mean, it was going quite well, really big red candle on that announcement today. It's bounced beautifully. I'm expecting that to keep going back, trying to that $8 again. So look, would I be buying it today? It's a good question, because if you look at the day looks actually very good. Look at that. That looks extremely good. So, okay, I buy it today. I have a stop loss, say 670, 675. and I'm probably targeting at 750, 760. So that's not a bad 8% trade. So I'm saying, yeah, look, on that announcement, I'm happy with it. I'm going with it. Both weekly and daily look pretty good. Even though we're buying them with the week, you're protecting yourself, and you're actually using the daily as your stop, and you're targeting at 767. You never know, it could give you go further than that. So look, I like it. I think it's definitely one to put on your watch list, and now it's getting a bit more serious for me. So I'm going to definitely have a bit more of a look to see what the possibilities here are with Telix. All right, let's move on to the last one we want to talk about from the announcements this morning. That's RBL. Look, I've lost interest in RBL a long time ago. I thought it was pretty interesting back in the early days of the tech boom. I bought some stuff off it and it really put me off. And then I started looking further into it. I just didn't like the business model of theirs. So I let it go. Tell me about it, because I know you wrote a big article for your guys. What do you think, RBL?
Yeah, so this was a bit of a hype stock. Look, it became really pushed to millennials and Gen Z. Huge on, this is back in 2020, 2021 in particular, which is when it peaked at the beginning of 2021 as well. And it's really driven by a lot of, it has a very promotional management style where they try and say, oh, we've got this, or this network effect, and they have a three-way flywheel where the artists are making more artists, bring in more customers, which allows them to have more volume, so they can get cheaper manufacturers and a wider range of items that they sell, which brings in more customers, which then brings in more artists and content. Anyway, it's just like a fantasy. The actual market for t-shirts with prints on them and stuff like that is just the internet, right? You can just like t-shirt with whatever, you put it in Google. Redbubble might be an option. There's a million options. You don't need a marketplace for this. It's not like buying and selling a used car where, yeah, you need a marketplace because I've got a car in Sydney and I need to find someone who wants to buy this car in Sydney. You're linking a specific buyer and seller. This is like mass market, just cheap clothing stuff. So just fantasy narrative there, which, the style of YouTube is the worst possible way, because it's just gets pushed out automatically, algorithmically to the kids. They're just reading out the company announcements. If anyone puts a negative comment about what they said on their YouTube channel, they just delete it. So it's just, they push the ideas, got a massive ramp. The company encouraged this. And, it's just absolutely fallen apart since then, of course, because it's actually really bad business. And what has happened, including in the most recent quarter, is, they've been telling people, oh, it's just their numbers are always bad, but, they always want to try and tell people they're a growth stock. Now what's happened is in the most recent quarter, they're basically flat, let's call it flat at a revenue level, but their profit is massively down, 24% down, 21% down, quarter over quarter, because they now have to spend so much more money like advertising. So if you think about this business, they can decide their revenue by how much they advertise. If they advertise less, then maybe they would have made a better profit, but their revenue would have been less. So it looks to me like, they can control it with how much they advertise in Google, etc. So they've made a decision where they want their marketplace revenue to be pretty much flat. And in order to do that, they've had to take a 20% haircut to their actual gross margin, which of course has plunged them into unprofitability. And that's the nature of their business, because they pay a tax to Google to operate in this super competitive environment that they are, which is selling prints on t-shirts or mugs or whatever it is. And as a result, you wouldn't want to be. It's always going to have, if it's got a good time, you have the right economic conditions, it can make a profit. But over the course of time, this is a 5% profit business or something like that, super low margin business. So, once the market gets super depressed about it, there might be value here because it's going to be a real business, but I wouldn't be buying as it gradually sort of deflates the bubble that it was in before.
Okay, fair enough. Yeah, not for me. Look at the charts. It's just awful. Pass. Let's move on to something more exciting, Claude, and that is the thought of the week. If you want, I can start first. You can just take a little bit of a break,
Yeah, sure.
and I'll go through my little idea. And I actually wanted to talk about it last week, but I thought, I'll do Havila last week. I'm going to go for another interesting mining space story, and that's going to be developed. So I'm going to put this actual chart on first, so you can go have a look. And look, this is such a fascinating story, I have to say, because I really don't know where it's going to go. But the chart looks pretty good, right? Would I be buying that around there? Maybe it's getting a bit tired. Maybe you want to buy it closer to that $3, $3.20, somewhere around there. But I just want to talk to you guys about this because, Bill Beeman, of course, of fame from Northern Star, taking a penny punt under 10 cents to a multi-billion-dollar company, right? He used to work for, I think, a couple of big gold companies back in the day, and he knew what he was. He got his experience during that managing. He decided to go on his own, went to Northern Star, and obviously the histories he created over there is unbelievable, right? So his track record on that just part is absolutely fantastic. So when he's moved into this VentureX, which now become Develop Global, I just found out what is he going to try to do here? And to be honest, I still don't know, because what he's actually done, he's got 3 projects from the VentureX days, which is Wind Creek, which is I think under JV, Sulphur Springs, which owns 100%, and he recently bought out of administration Woodlawn. So he's a wheeler and dealer. We know that from his days at Northern Star. So he's got 3 projects potentially, that might be developed here. But he's also decided to start a underground mining business, which, from that point of view, thinking to yourself, how do they fit together? But it's interesting because there's maybe a blueprint that he's might follow with someone else. Even though when I think about it, is there anything else around like this? And I can't. There's a little bit of that Chris Ellison in this from Mineral Resources fame, where he's got various things going under the umbrella of Mineral Resources, like you've got, your iron ore, he's got oil and gas, which has got, makes no sense with iron ore. There's got lithium as well. So, there's got a lot of different things going at the one time. Here is obviously with Bill Beeman, he's got the 2 things going. He's got the projects that's VentureX accumulated. Now is obviously under the umbrella of Develop. But that underground mining could be the thing that maybe drives all this forward, because he's got already, when he first started from scratch, really, 400 million mining contract with Bellevue Gold, which is a underground gold mine, right? So he's going through that already. They're very happy with them, Bellevue, because I've been reading about through what they were actually been saying. I think they're ahead of schedule with the underground development and mining. So it looks pretty good from that point. So can they expand this? Absolutely. So when you look at the bigger picture for me, and I'm looking at what's going globally, the transition we're going from the old school mining, coal, you name it, right? We're moving into the new green mining centers of copper, lithium, and some other things out there, right? So I think the transition is going to take a long time, right? That's the first thing. So if there's going to be lots of work for these guys like Bill Beeman's developed, and if they can obviously play the cards right and get a reputation in this could be multi-billion type business for them, right? Although there's a lot of competition, if you can do things very, very well, you're going to be still in demand, I'd say. So I'm liking that side of things, right? He's only just starting in it. I'm liking this. I'm also liking the fact that he's actually winning and dealing in some of these other, because the actual projects themselves, he's already got about 300,000 tons of copper, right, under his belt in WA on those projects. So that's already growing, and he wants to develop the thing. Maybe for me as a big investor, if I'm looking for that 1 million tons of copper, like we talked about Havila, they've only got 300,000, right? So it's much smaller, but there's potential that they can actually expand it and still make some money on this, and maybe they will and deal and get some more stuff out of it. But overall, the package itself, I like it. I get excited when I see a guy who's ambitious, he's got that long-term bigger picture type of stuff, like NST. Who would have thought is going to turn into a multi-billion-dollar company? So that's why I am liking what he's doing here, and I'm happy to follow him. I'm happy to buy at $3 and see where it takes me on a ride.
And what are the main exposures in terms of commodity price, do you reckon?
Basically, he's looking at the transitional metals as well. So the usual basic metals. He's got zinc, copper, and I think a little bit of lead in there as well. So base metals, and I think maybe a little of gold in there too. And of course, mining wise, he's done gold first, but I'd say the underground mining business he's got is probably transferable to some other metals as well in there, right? So overall, I think flexible, yes. He's looking at the right metals for me as well. I'm liking it, and long term. When I'm thinking long term, that's what you want to be. You don't want to have some fantasy metal that does well for 6 to 12 months and then it falls off the radar. So yeah, look, I'm really excited to see actually where it takes this, where the price will be 12, 24 months, 36 months down the track. So I'm going to really follow it a bit more closer, because now that I've got the chart where I want it to be, and now when I'm thinking about the long-term future of some of these metals, even though they might still go through their small booms and busts, generally speaking, I think because we're in a transitional period, and we're trying to obviously save the planet here, I'd say we're going to see a pretty good demand overall over the next few years. So I'm quite happy to give Bill Beeman my money, and let's see what he does with it, pretty much, right? Without me actually thinking too much about it. So that's my thought of the week. And like I said, maybe it's not today's the time to buy. I think maybe just want to give it a week or two and we'll come back to it, but at least put it on the top of your watch list and see how he goes. Because I think this guy is a great operator and he probably should do quite well with this company, especially when he's got a track record at NSD. And the other one thing I just want to talk about, they are going to come up with an update in probably the next couple of weeks. So that could also be a catalyst, hopefully a positive catalyst going forward. But it is a big risk event. So we'll see how it goes. And I'm saying still probably it's going to be a net cash flows coming out of company for develop, because obviously they in the early phases of trying to establish themselves. But saying that, I want to see what the future holds for them. I want to see how they update moving forward. So that's for me. Pretty good company. Let's see how he goes. So I'm going to throw it over to you now, Claude. And I know you've got a great theme happening here. So I'm all ears. Go for it.
All right. Well, thanks for that, Peter. That's an interesting one. Yeah. So I thought I'd just do a little bit of a sector, and maybe you can get the charts up for us. But
yep.
A sector review, a tour of the medtech sector. So mentioned before, this is a sector I'm interested in and follow closely. And I think there are some that are picking up. Look, we've talked about Volpara already. I guess like probably the next one to talk about might be Alcidion, which we both know well and we've talked about before. Now, this one I started with basically because I think it's my favorite in the small cap medtech sector at the moment. Look, the reason it is unlike Volpara, which has just got one positive cash flow quarter, Alcidion's got pretty much a year behind it now and is forecasting a bit to positive this year, and I reckon it'll be profitable in FY 2024. On top of that, it's been announcing both new contracts that have the ability to expand and expansions onto existing old contracts. So some potential, there's kind of a bit of growth still in the pipeline there with these guys. They do have, more than half of their revenues, recurring revenue as well. So that's a bit short of Volpara probably on that, which is mostly recurring revenue. But these guys have a mixture of, one-off revenue and recurring style revenue. Very sticky customers, of course. So, and also a long listed history. The management team, you've got to admire. The CFO did a good job over at what is now Symbio over the years. He moved when that company was flying high to Alcidion. Alcidion's had a bumpy run in line with the tech thing since he came on, but I think he's pretty good. The CEO's been there quite a few years now. She's taken the stock from, around current prices or even below current prices all the way up to 40 cents, then back down. She's held that whole time. She has a strong holding, and I don't think please correct me if I'm wrong, but from memory and from having checked in the past, I don't think she ever sold during the heady days when the share price was probably way too high, and she probably knew that. So I have a bit of confidence in these guys, and this is my favorite in the space. I guess moving on now probably to another interesting one that's M7T, Max 7. These guys have had good, now this is probably of the space, this is the ones that are the closest to being a direct competitor to Pro Medicus, although there are overlapping bits with, say, Volpara as well. However, these guys definitely are doing smaller hospitals that are more cost conscious, that aren't necessarily going for the best software. They're more competitive on price. So not exactly where you want to be in the niche. However, if the margins are so high at the top end of it, then even if you have to be a lower margin version of this business, maybe your margins are still quite good in the end. So that's the argument for these guys. Less recurring revenue here than Alcidion. However, and very much selling a lot of their new business is very much on a one-off style basis as well. So they recently announced a $16.7 million customer contract, and the majority of that was going to come in FY 2023 with 7.5 million. So not quite the majority, but almost the majority in FY 2023. And the annual support fee is weighted to the second half of the contract's term. So basically it's going to be sugar hit to revenue in FY 2023, and then it's going to drop off in FY 2024 if it's not replaced by some new one. That said, the share price has responded to this, and it could be a good thing because it does probably shape up for a reasonable run in FY 2023, and we may even see, I'm not quite sure, it would be great to see it get actual profitability. I don't think that'll necessarily happen. It might get a bit to positive, I would say. So it could be around the same situation as Alcidion, but yeah, probably not such a high quality business, I'd argue. And they're only targeting a growth of 8% on FY 2022. So yeah, bit weaker than Volpara. I have a tiny holding in this one. I own shares in, a bit weaker than Alcidion. I own shares in Max 7, but only a small holding. I would consider them quite speculative, but interesting nonetheless.
Okay.
Oh, one last negative: CFO transition. So that's probably the biggest negative for me. And if I had a large holding, that'd probably be enough to make me sell some. But as it stands, I only have a tiny holding, so just going to follow along.
Okay.
Despite what is, to me, CFO leaving, always a bit of a red flag, or at least orange flag.
For sure.
Next one, let's do, what did I say on that list? Let's go to IME, actually. This is one that I get asked about a lot over the years because it reckons it's sort of in a similar space to Max 7 and this sort of radiology software company. So this one for me has been always been pretty much uninvestable. It's actually largely a South American business. I don't know how many related party transactions there still are in the most recent. Yeah, they still got. I think reducing their related party transactions. So in the past, they had quite a lot of dealings with, the CEO as a separate entity because he owned sort of radiology clinics that were major customers.
Mm-hmm.
So it was a real mess. I think they're sort of starting to clean that up a little bit, but there's just red flags everywhere I look with this one. I think another easy red flag to point to would be this is an unprofitable cash flow negative company that also has debt, $2 million in debt. So there's one reason to never own it until that debt's gone for a start. Yeah, maybe gradually cleaning things up because I think, the market's cottoned on to this not being investable. Mm-hmm. But still, you got to ask, why is there a South American software business that is definitely not top of the line listed in Australia? I think the answer is because that's where they can find bag holders to give them money. So
that is.
I don't know, that could be wrong. Maybe there's some other really good reason that are listed in Australia, and so that was just pure speculation on my behalf. Could well be wrong, but I suspect it's just because where they could get the best price for their business. And obviously those people who have invested, are sitting on losses now. So not much liquidity in this either. Totally uninvestable in my point of view.
Claude, a terrible chart. So definitely uninvestable
Yeah,
from any point of
yeah.
view. I haven't seen as bad a chart as this one. So yeah, do not touch.
No, this space, by the way, is littered with failures because it can be like a bit of a, hot space where like some rubbish gets listed. Like, oh, there's another one. I didn't send it to you before, but since we're doing the tour, how about GLH? Let's check in on old global health.
Okay.
I think I actually made money on this once back in the day, but it was still a learning experience of just utter disappointment and devastation.
Yeah.
So this one's come back out got a bit hyped up last year. It's like hope springs eternals with these stocks, which is great because if they're performing and medtech has such good sentiment, then that's where you get these massive re-rates.
Usually these companies, the medtech companies, sell a huge dream, right? That's what they do.
Yeah, exactly.
And people get excited. Oh my God, there could be millions of dollars of revenues and all sorts of things.
You got to really watch out. There's some real rubbish in this space, and I say I love the space. And that doesn't mean I indiscriminately buy everything in the space. And yes, I take a basket approach. I'd like to hold a few in the space, but I'm trying to pick the best ones because trust me, there's some absolute also rans around here.
Yep.
And look, I don't know if the situation has changed with global health, but whenever I've checked into it, it's, since my initial investment and then I got out of that, I think pretty much unscathed, but ever since following it along closely, I started to realize this is not a good performance company at all, and that I was not comfortable, investing alongside the guy who was the CEO, but I think now he is the chairman, maybe.
Okay.
Although the actual website itself, I think, refers to him still as the CEO. I don't know. Yeah, anyway, look, he's still a major shareholder. I'm not sure. Yeah, so I'm just trying to confirm. I think it's the chairman still. I'm not keen on being along there either way. Like, I'll definitely take a long time before I believe this is anything other than underperformance factory. But actually, I do see recent announcements, leadership changes. Okay, so the CEO who's been there for a pretty short period of time is now leaving global health. So that guy didn't last long. And now the old guy, Matthew Sherian, the founder, major shareholder, and the guy that I was talking about, he has been appointed managing director. So he's moved from CEO, briefly gave someone else the CEO role, and now he's back, but as managing director. So the fun and games continue. So my hot tip is just avoid that one.
You're looking crap on charts.
Yeah, so there's some terrible ones there. So just wanted to warn you guys essentially.
So tell me, out of obviously the top three, would be VHD, M7T, and Alcidian. Can you rank those three? Your preference?
Yeah. So in the small cap space, those are the top three. Obviously, in the overall space, PME is the absolute queen.
Yep.
Look, I'd say in that space for me, ALC is a clear winner. The reason for that is just because you've got the highest confidence in management there, and management trust is super important in this. It's like probably one of the key things is how well these companies are run is going to be the management competence, honesty, and the esteem at which they're held, because they're going to be selling to doctors and stuff as well. Like sometimes it would be even better if they had a doctor CEO. That would be the ideal situation, but you can't always have someone do that. But well, I should say doctors broadly. Of course, it can be radiologists, it can be clinicians running hospitals or whatever. Alcidian seem to be real experts at selling to public health systems, so I think they have a nice niche there. It's not going to be as good as Pro Medicus, but they're pretty good there. Much smaller company, obviously, right now. Secondly, I would have said Max 7, probably until today. I have to say, I think these results even though they are just a one-off good quarter, I've been impressed with the talk that the new CEO for Volpara has been talking, saying, oh, you're just going to cut costs, make it profitable, make it cash flow positive.
Mm-hmm.
Now, it's kind of cool that they did this. So that gives me hope. I'm not saying I'm chasing here, but in terms of pure quality, I have to say I think Volpara is probably ahead of her. On top of that, Max 7 is more in the competitive area where it is. I think it's still an interesting company. However, it's like sort of very spread out around the globe. Volpara has like got a lot of business in the USA, which is, they're really trying to be dominating their like little niche right now.
Mm-hmm.
They do have some formidable competitors left and right, but they also have like, I think they have a huge reach within that market, and they're quite like they've got a brand for this breast density stuff that they made their name on.
Yeah.
And so I think probably that these guys are quite interesting now, and maybe in terms of quality, they would be above Max 7. Just in terms of what obviously like there's a bit of a conflict there because I actually own shares in Max 7, but my money's not where my mouth is on this particular one because it's only really today that I'm starting to upgrade Volpara, and I don't want to chase, but
that's all right. But you can see what a one announcement does to our psyche. We've moved up.
Now I'm much more in a mindset. I kind of want it to come down again so I can buy some shares. So.
All right. Oh, look, I think we've gone long enough, so let's call this a day. Thank you so much for discussing that. It's great ideas. I love talking fundamentals with you, and we're coming up with our idea for the week. So thanks, guys, for joining us. Enjoy the rest of the week. We'll see you on Friday for Ask the Analyst, and we'll see some of the charts, and hopefully there'll be some good-looking buys. Thanks very much, Claude.
Thanks, Peter. Have a great day, everyone.
Cheers. Bye.